market events, in particular the sell-off in Japan, and then also discussing Tesla call with IR. The main takeaways from the Tesla call with IR are that business, at least until most recently, seemed fine in terms of volume growth, margin stabilization, and FSD penetration. Those are the three things that I think are okay. Now, we don't know what changed in the last couple of days. There could have been some macro changes, some immediate stop of demand and things like that, recession fears. All kinds of turbulent things have happened in the last sort of 6 to 8 days. So we want to take this with a caveat, but the call was relatively positive when it comes to that. Now, the one negative thing that I personally took away is the Cybertruck margins, that they seem to be permanently subdued because, as he explained it, the higher weight type vehicles, they cost more to produce. They also cost more in terms of, particularly in terms of battery. 123 kilowatt hour battery for a Cybertruck for the same range like we have in our Tesla with a 65 kilowatt, maybe 60. So double the size of the battery for the same range. Now the price is higher, but I guess we're looking at a situation here where we need a more aggressive timeline as far as battery is concerned. So I'm going to talk about this. This is definitely a negative. And as far as the market is concerned, again, Japan sell-off, the way we interpret this is that somebody blew up somewhere, some hedge fund blew up. This is long-term capital management 2.0 or 3.0 or whichever 0.0 you want. The reason we believe that is that's just the way the market acts, the volatility, the extreme ups and downs, the leader stocks like Nvidia taking huge hits for no fundamental reasons. So typically those are behaviors that are connected with some massive turmoil and some massive liquidations in the market. This is Not Even Wrong podcast. It's August 6, 2024. This is Krim Delco. For the year, we are down 3.2%. The market's up 10.6%, underperforming by 13.8%. So let's start with Tesla. We had a call with IR. So I want to just discuss a few points, and let's just start with the big takeaway, which is Cybertruck margins. So let's talk about Cybertruck in general, the way we see Cybertruck and the way we calibrate the margins now after this call. So Cybertruck is a product that, in our opinion, can do a couple 100,000, probably up to 1 million trucks per year at some point globally. There is demand, but it's a new product and it's a new category, and it's a category that we have to be very careful. Because it's new, it's not going to fit into any drawer that exists. What I mean by that is that we have a truck business right now which is dominated by Detroit, and there are people who buy these trucks, and most of the people that buy these trucks, they buy them because they use them. And the reason I say that is obviously, this sounds kind of obvious, but it's not so obvious in a sense that there are also people that buy trucks because of lifestyle decisions. And what we're saying is that actually, and this is confirmed by Abhinav, the IR, there's a lot of first-time truck buyers to buy the Cybertruck. And what that means is that we have a new category of car here, which is an urban status symbol, cool, really smooth drive, functional, but not functional in a professional way. What does that mean? So if you have to haul wood in the woods of Vermont, like Tucker Carlson recently presented in a video, if you have to haul tons and tons of wood, you're gonna have probably a problem with range. This is at least possible. And the reason you're gonna have a problem with range is because the truck is not able to deliver you the kind of range that you need to professionally execute whatever you need to do. So this puts a big question mark on the usefulness of the Cybertruck, right? Now, we believe that that is a problem, and it needs to be addressed. And I asked the question whether we will see gradual improvements in battery capacity. And the answer is sort of yes, of course, but don't expect too much kind of thing. So I don't want to go deeper into that. I didn't talk too much about any kind of roadmap of increasing performance or range per dollar or anything like that. What he did say is, though, that the 4680 and the dry cathode and anode and things like that could definitely help improve range. It could help improve cost, capital intensity, so things along those lines. And if you can add, maybe you can make a 150 kilowatt hour battery for the same price, or you can have a 120 kilowatt hour battery with high performance. In the end, what you need is higher range. You can already have that higher range, of course, by buying the additional battery pack that they're offering. And I guess now we know why they're offering this, because you might actually need an additional battery for, if you want to haul woods out of the woods of Vermont into some, lumber yard or things like that. But what's exciting about the Cybertruck, okay, let me talk about what's exciting, and let me talk about some of the maybe a bit less exciting things. But we believe that there is a good chance that the Cybertruck will turn into a successful product. And here's why. We believe that the Cybertruck could kind of become a little bit like an Hermes bag, right? What is an Hermes bag? It's a handbag, but of course nobody buys an Hermes bag because it's a handbag. Actually, it's probably functionally not great, and you're paying all that money for status. So the Cybertruck could become the same thing, a status symbol, an urban status symbol. I can afford this thing. I can afford the higher total cost of ownership than, let's say, even a Model X or a Model S. I have space. I'm a big guy. I am a rapper. I have a bulletproof truck. All those kinds of things. So this is sort of the way we see the evolution of the Cybertruck. And then the question is, okay, of course, how big is this market? And the answer to that is the market's probably bigger than you think. Status, vanity, those are really good selling points. And we could actually see large volumes in places like China, in places like, urban places of the United States, so places where you wouldn't have expected the Cybertruck to sell. What is the downside? He spoke about margins. And here's the problem. He said that a typical pickup truck is a high margin product for Detroit because they're basically selling you the same technology, just with a bigger, with a bit more steel around the chassis. And they're making good money. With the Cybertruck, that doesn't work, because the cost of the Cybertruck are higher and the battery is higher. Now that, in our opinion, will abate. We will have better margins going forward. But he said something interesting. He said, when we start with bigger vehicles and then we go down, we increase our margins. The smaller the vehicle, the better the margins, because battery is a big part of the equation. And that's not the case in an IC car, where the engine is not such a big difference between a large and a smaller vehicle, and also weight and things like that don't play such a big role. So that's kind of what he said. So I guess we have to expect going forward probably some margin pressure by Cybertruck on the company. But in the long run, we think that the Cybertruck could become this aspiration product, like an LVMH, like an Hermes. So let's keep that in mind. I think this is why we do these calls. This is what we can learn from these calls. We can have a different perspective, and that's what we do. That's what we do. The purpose of this podcast is to give people a sense of what it feels like to run a hedge fund. So this is what it feels like to run a hedge fund. It's to have a conversation with a company and try to understand what they're doing, and then try to have a view of the future that is grounded in reality. A few more things from the call. FSD, take rate of FSD is, let's say, better than expected, but still not great. So he gave us a few numbers. which, by the way, is the first time that somebody actually did that. And what he said is the following. He said that the penetration rate of FSD in the US is increasing. So what that means is that you have, let's say, 1 million cars in the United States, and you have, let's say, 200,000 people who take FSD, so a 20% penetration. And now, let's say you have 2 million cars in the United States, and you're going to have more than 20% penetration. So that means you're going to have more than 400,000. So you're going to have, let's say, 30% penetration. So on 2 million, that would be 600,000 cars. So you're growing from 200,000 to 600,000, which is 3x, when the car fleet is growing 2x. So that's what he said. That's all great. Now, we believe this is, again, us grounding in reality, but looking forward. Grounding in reality for us means using the product. We use the product every day. And we believe that the breakthrough of FSD will be when people actually start using it natively. And what that means is when they start using FSD for things that you wouldn't be able to do without FSD. For example, come to downtown Manhattan and just get out and go to a meeting and head to the car, go park itself. Something like that. We think that those types of what we call unsupervised FSD products could potentially drive the penetration up to 100%, because then it becomes almost indispensable to have this thing, because it saves you parking costs. Another potential driver of FSD adoption would be through the insurance. We didn't speak about that, but overall, I think Abhinav didn't confirm, but he also didn't deny the potential for these types of products and services. And this is, again, something that we believe is absolutely possible and will drive margin accretion in the company. So by the way, we compare this with AWS, for example. So when AWS started in the early 2010s, or when we started looking at it, actually, to be precise, of course, it started much earlier. But when we started looking at AWS it was 2011, maybe something like that. AWS was a great thing. It was a great product, but it was kind of one of those, like, yeah, it's there. We can use it. We don't really need it, but it's great. We might want to use it. It's convenient. We have all stuff on premise. We do all our software development on premise. There's no such thing as cloud native, development. None of that stuff. But there's this ability to rent out compute if you need it. And for anybody who knows the story of AWS, the way it all started is it goes all the way back to the early days of Amazon, when they had this huge overcapacity because of Christmas. So they had to deliver all these packages, and then throughout the year there just wasn't enough demand, and they started renting out stuff. So this is how the whole thing started. And for a long time, it was just sort of a nice to have product, a sort of addition. It helped a little bit. It helped on margins. It helped on all kind, stuff like that. But it wasn't like the driver that it is today. And then the inflection point came when all of a sudden, of course, other things happened also. I don't want to go into details. Now, by the way, I don't know the exact story either, but certainly people started doing more cloud-native software development, or the idea of cloud-native software development, which is also driven by companies like Salesforce and NetSuite and all those early pioneers of cloud computing. They started driving this idea that why don't we have software in the cloud and we sell SaaS, software as a service, right? And when all these things started happening, startups started jumping on the bandwagon, and lo and behold, we had AWS as a driver, as a massive margin driver for Amazon. So that's kind of how we see the same with FSD. So let's just keep this in mind. Keep AWS and the evolution of AWS in mind. So we don't think that Dojo is necessarily going to be the AWS. We believe that FSD is going to be the AWS. So that's the second big takeaway from this call. I would say overall, Abhinav was relatively positive on the business, but again, this could have changed because of the next topic that we're going to talk about, and that is going to be about what happened in the markets over the weekend. We had a crash in Japan, and how do we calibrate all this? What does this all mean for us? Well, first and foremost, always keep in mind, leverage. That's the only thing you care about. Leverage in the business and leverage also in your life. When you have massive downturns, when you have these corrections, when you have volatility in the market, it doesn't matter why it's happening, and you better be prepared for it. And the way you're prepared for it is by managing your leverage. So that, I've spoken about this several times, and I just want to keep this in mind for everybody who is in the business right now. Watch your leverage. And it's not just the debt that you have against your stocks or positions, futures, whatever you have. It's also your cost structure, your fund. Can you sustain maybe 2 or 3 years without fees? We're already this is the 4th year that we're not going to be making fees. Okay, so our income has been massively reduced for the last couple of years, and we're still way below our high water mark. So we as a fund are suffering, but that's okay. We have a cost structure that allows us to continue operating, and it's not great, but it is what it is, as they say. What happened in Japan, I think, is somebody blew up, classic blow up, whether it's a hedge fund, whether it's a prime broker. Something like that must have happened. We had these massive, it could have been SoftBank, could have been a prime broker that works with SoftBank. The reason I mentioned SoftBank is just because they're the most levered and the most speculative player in Japan. It could have just been, what happened sequentially is the following. So we have the yen losing its value against the dollar gradually this year. 30-40% actually, right? So yen getting weaker, which is a good thing for people that are short yen, people that borrow in yen, which is a lot of people actually do that. That's the carry trade. You borrow in yen and you buy either Japanese stocks or you buy dollar stocks. So this is all great. It's phenomenal. And Japanese stocks are going through the roof. The world's happy. People are making money. And then the Japanese central bank all of a sudden decides to raise rates. Why they did that, in my opinion, is probably to stop a massive devaluation of the yen. So there must have been pressure on the yen from not clear where. I guess a lot of people started shorting the yen even more because this is kind of like an avalanche effect in the sense that you can have the yen going from 100 to 140, and then you can sort of start piling up on it and hope that it goes to 250 and maybe 1,000 and God knows where. In other words, there is this phase transition. Like Forex markets are a bit like, or generally financial markets are very close to physics when it comes to that. Like it's like the Lenin quote, right? For 100 years nothing happens, and then within 1 week 100 years happen. Like a lot of times nothing can happen. For decades people have been shorting the yen and nothing has happened. And now it could be the time when actually the yen could collapse and really become a third world currency, because that's what Japan is as an economy. It's a third world country, large amounts of debt, sclerotic economy, no growth, high cost of living, all kinds of terrible situation economically. No innovation, no really. I mean, there's a lot of scientific innovation and things like that, but there's no growth. There's no wealth creation. I've given up analyzing the Japanese economy a long time ago, so don't ask me about the intricacies of, let's say, Japanese trading companies and how they're intertwined with the economy and how Keiretsu works and what Sony represents or Toyota and all that stuff. I have no idea. All I know is that you have a country that has a very high level of education. People certainly work hard, but you have no growth. And the reason you have no growth is because the macroeconomics of Japan are just total mess. And in my opinion, this all is now culminating into what happened over the weekend. We had a crash, a classic crash. Market was down 13%. Clearly, that's a crash. Now we have some interventions. Probably the central bank intervened yesterday, maybe even our Fed. You're going to have some more volatility going forward. We can already see it. Let's say today the market was up, and then after hours immediately stocks were down again. So this is definitely this is settling accounts. People are liquidating. It's going to go on for a while. We don't have necessarily the best of expectations for the near future. What we do expect, though, is lower interest rates in the United States and a stronger macroeconomic environment for our stocks. This is the key. So this is not changing any of that perspective. So to summarize, on the call Tesla, we had two big takeaways. One is about the Cybertruck as it turns into an urban status symbol, a bit like an Hermes bag. And we had FSD take rates actually better than expected, and FSD sort of as a AWS type adoption. And we discussed what happened over the weekend, in particular the Japanese stock market crash, which we attribute to whether it's a prime broker or a hedge fund blowing up, and that in itself also as a result of the devaluation of the yen, which could continue and which will cause lower interest rates in the United States and an intervention by central banks. Thank you.